Hello and welcome to Compounding Curiosity. I'm your host Kalani Scarrett, and this podcast is all about compounding your curiosity alongside my own through thoughtful interviews with interesting guests. For transcripts and detailed show notes, check out the links in the description. Hopefully you're as keen as me to learn something new, so let's get stuck in. Alrighty, my guest today is Rachel Lau. Rachel is the managing partner and co-founder of RHL Ventures. RHL is a Southeast Asian-based private investment firm that focuses on growth capital investments in the Southeast Asia region. In today's conversation, we cover the VC scene in Malaysia and ASEAN, how the landscape has changed over the last 2 years, and the story behind RHL. So I hope you enjoy my conversation with Rachel Lau. Rachel, I don't think a intro story by me will do you justice. So before we get into the VC, PE scene in Malaysia and RHL, for the listeners, could you just introduce yourself and give a bit of background intro?
Sure. Hi, my name's Rachel. I run RHL Ventures with a couple of partners. We're based in Malaysia. We essentially invest in Southeast Asia businesses or high growth businesses that's looking to invest and innovate in this part of the world. Our main business is basically high growth tech startups, but obviously we invest, across the board in terms of sectors.
So could you talk a little about the VC landscape within ASEAN where you invest? So maybe like the numbers, or is there any sort of descriptive ideas or statistics about what the market looks like?
Sure. There's about 600 million people in Southeast Asia. The average age is 29 years old. So it's a fairly young demographic. I think we're probably middle class, if not, lower middle class as an average in terms of the region. The idea for us investing in this part of the world is obviously to capitalize on the high growth that we see. And also, to be fair, we see quite a few younger people coming back from overseas, having a diverse background, either in tech or, healthcare or finance, and wanting to come back and making their mark. And so, we invest in guys that do that or guys who are just really looking to make a change in the world.
Yeah, so it's almost like a reverse brain drain in a way.
Yes.
You mentioned age demographics. Does that reflect in maybe the types of companies you invest in?
I mean, across the board, we've got guys who are 27-year-olds and we've got guys who are 45, right? I think from an investment standpoint, we try to get a diverse mix of founders, a diverse mix of backgrounds. I think that's the whole idea. I like diversity in the way that we've looked at things. I think diversity, not conformity, is the way moving forward. And especially, in this part of the world where people say it's Southeast Asia, but, in reality is, in Malaysia and Indonesia, you speak Bahasa, but there's some 5% similar, right? But it's not exactly like British English and American English. It's really different, but you can get away with understanding some of the things. And then there's also like the Vietnamese and the Thais, and, religion is different, currency is different, rules, laws are different. So I think from that standpoint, I don't think there's a conformity or uniformity in a way to invest in Southeast Asia. So for us, we're a little bit more diverse. So age is just a function of, how good you are or how experienced you are. And I think we're a bit more open-minded when it comes to investing.
Yeah. So then how do you navigate those differences within the cultures? Is it having different people in your team with that diversity, or how do you manage it?
Both, right? So we've got people with different backgrounds, either, age, race, gender. But also, I think another way that we've circumvented this is by getting local partners. So in Indonesia, we work with, guys who are strong in Indonesia, either from a VC or corporate scene, same in Thailand. So I think from that standpoint, we've been pretty pragmatic about the fact that, you're not going to be everyone to everything. So let's be a bit more open-minded on and who we work with. So there's a lot of partnerships, right? So like one of our funds, for example, is a partnership with the Korean government, Korean fund, Bank, and it's supported by the Korean and Malaysian government. Yeah, I think it was coincidental that happened, but essentially, I think for us, in understanding or lending some lenses of developed markets and bringing it back to emerging markets was quite helpful for us.
Yeah, fair enough. And is there any trends that you're seeing among the companies that you've backed recently? Anything notable or interesting that stands out to you?
We've seen thematically people are getting healthier, so people care about health. I think COVID was one thing, but also at the same time, I think it's maybe the younger generation. So we're a bit more health cautious than our parents. So no fast food, no sugary drinks. We go to the gym a little bit more. We want to look good. And I'm not sure, if it's social media influences or what it is. But I think people care about their health a lot more. So I think the trend is towards healthier food, healthier lifestyles, and, just people wanting to be better. And so I think that's probably the biggest trend we've seen. So a lot of investments that we've made in the last 1 year or so has been into health and food. The food thematic came up from the fact that, when we saw COVID-19 hit, food security, supply chain disruptions hampered, food delivery to a lot of like either the poorer population or as a whole, it was just a breakdown. So one thing that we wanted to do in RHL was essentially invest in companies that could solve that problem and also providing better nutrients, healthier to people across the board. And so that's something that, we're still looking at. And I think that was something where we'll probably be investing a lot more going forward.
Yeah, no, it's an interesting space because it certainly is more of a lifestyle and a status type thing now, isn't it?
Yes, correct. I mean, and it's interesting. It's interesting and it's sad because like eating the salad is more expensive than eating meat now, right? And again, like, it used to be when we were younger, it was the other way around. Fast food was a luxury. Now fast food is seen as a pain, right? And the quick and easy meal is no longer good. So it's been an interesting trend. But I think it's for the better. I think obesity is a great issue, especially in Malaysia. Apparently, and I don't quote me on this, I'm not 100% sure. I think 60% of Malaysians are overweight, and I think 25 is obese, but I'm not 100% sure about that. But I know it was a pretty high number, and I think it's a function of sugary drinks. It's a function of the fact that, the food has lots of salt and fats and everything else. So, I think from that standpoint, we're being pretty cautious about investing in this part. And again, I think promoting a healthier lifestyle is probably good for everybody.
No, I totally agree. And you mentioned COVID before. Has your investing style changed over the last 2 years? Like, how much has the scene changed over that period?
Yes, in a sense that, we pre-COVID, we used to zoom in and out quite often of a country. And so diligence was very much, I see you, I need to go to your factory, I need to like touch your products. Now I think a lot of it is online. So to be fair, I mean, actually, and maybe I'd say the last 3 months or so, I think travels have picked back up. So to be fair, we've traveled, but not to the same extent of what we used to. And so the way we've done diligence have been a little bit different in the sense that, to be fair, now we rely a lot more on documents and we've invested a lot more in online stuff and digital stuff, as before to previously. I think, the COVID has accelerated digitalization, if anything else. And so we've done a lot more digitalization companies and having true operating leverage, right? Previously, people say, hey, we're a digital company, and it's really not digital. Now, it flows through your numbers pretty quickly, like whether you can sell it online. And then you realize it's really, the delivery method. It's, how you engage consumers online. Again, we're on our phones all the time. I go everywhere with my phone these days. And so if you're able to capture that market share, that's really helpful for everybody.
And I've heard you mention as well in another podcast about the speed of deals, like the deal process quickening up. How has that changed things? Is it a blessing or a curse?
I'd say it's a curse because I have to do more work more quickly. And to be fair, I don't think this will last very long because I think, honestly, with less time, we don't get as much diligence done. So there's a lot more leap of faith in a good way and a bad way. But I think ideally you want to make sure that you do diligence. I think, we went from 2 months to 1.5 months. So it's not like, we're significantly faster. But to be fair, the rounds are also getting shorter. Like the funding gaps, the funding in between gaps are getting a little bit shorter. So to be fair, I do understand why the diligence is getting shorter and cramped a little bit more, right? But, I think for us, it's been helpful because now we're on like a 35th deal, right? And so by sheer function of, mental exercise, we get to move a lot faster because we kind of know what you need to do, what the documents in place. And so it's a lot quicker. So I think it's a bit of both. But yes, the deals are much faster. They're much larger. It's a testament to the region as well. Previously what happened, what was a seed deal at 5 million valuation is now really like 20. So you can see the valuation uplift, but also at the same time with more money in the system and more liquidity, you're able to hire better people. You're able to invest in, better infrastructure. So I think, it's a good thing as a whole, for the region.
Yeah. Is there more demand for VC jobs and stuff? Is it a bit cooler now?
Definitely strong demand. There's a lot of people who care about VC, tech. It's sexy. It used to be, I went to start my own business. It's not cool. Now it's all the rage. I'm a startup founder. I think, one boy told me, hey, I went to meet my girlfriend's parents and they didn't say, hey, you're a bum and you don't do work, right? So it's quite nice to hear that. And it was quite comforting to understand or to see that younger people wanted to take that risk. So for us, I think it's a good thing. we'll see how it goes.
Yeah, cool. So I love the idea that you start fairly young with the companies you invest in, often in the A and B stage, but maybe the more interesting is the period after that. So they've got some money, they're getting going. What do you want to see during that initial period?
Well, there's a couple of things, right? Ideally, I want to see growth, but not at the expense of margins erosion. I think maybe 5 years ago, the Uber guys were saying, hey, we'll put in $1, and as long as we make back $1, it makes sense, right? The reality of it is, you put in $1, you should maybe be making back $10. And I think that's what a real company is. So I think sustainability of margins, margin growth is pretty important. I think we shouldn't be burning money for burning money's sake. And we shouldn't be growing for growing sake for it. I think you have to have quality growth. The way we've spoken to our founders is, grow, but not at the expense of everything else. But also don't be so prudent at the expense of growth. I think there's a fine line between everything. And the way we're looking at it is just balance of growth, balance of spending, and being a bit more pragmatic, and realistic at the same time of, where the situation is. If everybody, and again, this was a funny conversation, right? During COVID-19, we had a company who refused to spend. And I was trying to not choke him, which was again quite funny because they said, you're the most prudent person. Why are you asking us to spend? And I said, this is the only time where you'll have every eyeball on your computer or your mobile. So if there's any time to spend on marketing, this is the right time. And don't put it on billboards, put it on like online ads, right? He was really hesitant for the first 6 months. And then he said, you know what? I'll go and I'll do it and see how this goes. And again, like the first 6 months we struggled as a business. The next 6 months when he did that, every dollar that he put in, he got the $10 back. Because the reality of it is, so you've got to be also smart with the times, right? Nobody could get out. And so if there's any time to spend, your ROI was probably the highest during the COVID-19 time if you're a digital company.
Yeah, no, I totally agree. I'm kicking myself I didn't start the podcast earlier. It's all people have been doing. Is maybe to the opposite side of that, what don't you want to see? Is it someone just blowing money on marketing, hiring willy-nilly? Yeah.
Well, I think people have been, again, it's the same thing, right? If I spend $1 and I'm getting 80 cents back, this is not a good investment. Or if you're breaking even at all, it's not a good investment. But at the same time, I would like to see better execution. People talk about fundraising and the ability to fundraise. Oh, now it's, $100 million. It used to be 10. 2 months later, it's $1 billion. Like, is this real growth? Is this possible? I've got my skepticism on it. And so I'm not trying to put some of these guys down, but if you're raising money every 3 months, who's doing the work? And again, it's one of those things, right? I think you should be, it's a fine balance, right? I think you should raise around and I've got no issues with your valuation uplifts, but I also think that, it should be proven and not just, again, raising money for raising money's sake, right? Because if we're all throwing money down the drain and, these are real money, especially when it comes to sovereign funds or pension funds where, they're in custodian of a lot of people's money, I would like to see, better use of the money or more, what's the best word to say this? Being a bit more careful with how money's been deployed. So probably that more than anything else.
Yeah, no, fair enough. And maybe to zoom out on venture investing in general, are there any traditional rules or aspects of it that you fundamentally disagree with?
Yes. So I disagree with us investing on a GMV level, right? Because the reality of it is you could sell $1 billion worth of business of products, but if you're only making 1% of it, that's not a lot of money. So, striking a valuation on GMV doesn't matter very much to me. So I think what it is, revenues and how good the quality of revenues are. It's something pretty important to me. I think the VC community has also, moderated in terms of its hype, right? Just because you sell $1 billion or you're $10 billion, it doesn't mean you're going to be a great company. It just means you can sell. But, are you profitable as a business? But then I think, at the flip side, you got to think about if you're able to sell that thing, maybe it's not the money that you're supposed to make. It's about, what data you capture. So if I know, a person, the frequency of the purchase, for example, the average purchase order, I know where they live, whether they're female, I know what else to push. I think then that's the ability to capitalize on the data. But if not, then, I think, the way that, we traditionally invested as a VC, which is hey, let's sell the big numbers. But, let's go down to the details and see, what the big numbers telling you. What is it in terms of margin? What is it for a profit or loss making business? And again, what's the quality of data that comes out? So I think that is probably fundamentally how I see, because I came from a very traditional finance, value, investing background. And so I'm kind of going into the VC side, you kind of learn a lot of things, but at the same time, the value guys, quite ironically, don't make as much money as the growth guys, right? So I think just being pragmatic, on both investing, methods is probably the best thing to do at this point.
Yeah, no, I'd love to hear it. I'm a bit of value guy myself, but same thing. Value guys get a bit attached to margins or maybe the assets backing. So it's like, it's cool seeing the balance. Like you mentioned before, it's all about balance.
Correct. Yes.
And maybe for like foreign investors looking at the VC PE scene in Malaysia, what do you think they should know if they were to enter that market? Or is there anything you wish more people knew about the scene?
Well, Malaysia's an interesting place, right? Everybody comes to Southeast Asia and goes into Indonesia because, hey, there's 300 million people, this is the biggest growth. And then they go to like Vietnam because it's the second largest market, and then it's Thailand or Philippines, and that's the third or fourth largest market, right? And so I think from the standpoint, people forget about Malaysia in the sense that we're quite a stable country despite what the political headlines are. And again, I joke, for a small country, we're really good at making big headlines. But essentially, when you look at it, Malaysia is 32 million people, so it's a good size, a test bed for a lot of the companies. And then if you think about it, it's also a relatively higher income country compared to Indonesia, Thailand, Philippines, Vietnam. So yes, it might not have such a big population as Indonesia, but I'm pretty sure we make 10 times more than the Indonesians on average. You're talking about average scale, right? I think people say, a large market's good, but, I think when you look at the US, you're looking at China, they've also got some sort of an income that goes with it. And I think people forget that. So Malaysia's a good place to invest in. I mean, I'll be honest, like the last 2 years, we've seen a lot more about Malaysia than I've ever had because, to be fair, this is like the first time I was, staying put here, right? So you learn a lot more about the country. And the other thing that's interesting is there was quite a bit of diversity in terms of talent. We got pretty good hardware engineering businesses in Malaysia. So to be fair, our technical skills are pretty strong. Our software skills are not as good, but converting a hardware engineer to a software engineer is probably a bit better than converting me as a business major into like a engineering degree holder, right? So I think, from that standpoint, I think technical skills are pretty strong. So, from that standpoint, I think, it's an interesting place to look at. It gets, looked over pretty much by most investors. And then they realize if you calm risk and inflation and, cost of doing business and difficulty of doing business, and Malaysia's not that bad a place to start, as a testing bed for a lot of these startups.
Yeah, no, it's severely underrated. And even it's a small piece of the puzzle, but the English aspect for foreigners coming in, like.
Yes, correct.
In terms of maybe for young professionals looking to get into the private equity VC scene, what advice would you have for them? So what should they need to know and maybe what should they avoid?
I tell this to all of the guys trying to come in, right? I think be curious, learn. I don't like people asking a lot of questions, so I won't lie, because I think you should learn first and then ask the questions that are meaningful, right? Because you don't want to be asking, actually, honestly, there are stupid questions, not to be mean or anything. But, I think it also shows that you've done your homework. And I think that's probably the most important thing. Do your homework, learn about the scene, be interested and curious about things. And I think that's probably it. And so if you're there and you're learning, people want to have a good conversation with you, because I don't want to be like just telling you what to do anyway, right? I want to have a conversation, like you've got a different lens. If you're 22 years old and you're coming out from school, there's a lot of things I can learn from you too. And so it's kind of nice to have that conversation as opposed to, you asking me a bunch of questions and I'm like, oh, I've got to give you like a bunch of questions. Like, it's not a Q&A. So I kind of like the fact that it's an interactive conversation with the younger guys. And I think those are the guys that probably do the best because, they're genuinely curious as a person. And I kind of like that.
Yeah, no, that's fair enough. And with your journey with investing, what got you excited? Was it curiosity? Like, how'd you get involved and how has your investing style developed?
So I went in, I was a business major and a law major. To be fair, I wasn't as curious, in finance previously. So I just like to know things, right? And I think as a kid, I just asked a lot of questions. But I also read a lot. And so it was quite funny. So I read a lot and I think it was probably the only job you could get paid for asking questions and people don't get angry with you, which is kind of nice. So I remember as a 22-year-old, my first job I had an Australian boss, and he says, like, why are you trying to learn everything yourself? And I said, well, I don't know, like, shouldn't I learn and be a little bit better before I ask stupid questions? He says, yeah, but like, you're not going to get everything from a book. But so as long as you know your basics and you've got a little bit more understanding than you should, go and ask the questions. And it was true enough, like the quality of questions that I was asking was a bit better than, a person who knew absolutely nothing about it. Because then again, you're spending a little bit more time, in the subject matter as opposed to, having a point blank. And so I kind of just got in, and I think I wasn't that interested in investing. I was just curious about businesses, like how they work, why they work, who was behind it, what can you do better. And then along the way, when you see multiple businesses, you realize, hey, like there's some similarities, right? So like, when we talk about margins and growth and everything else, actually the finance bit of it was very similar. What you needed to do was actually learn about different businesses, and different business models. So, is it a consumer business? Is it business to business business? Is it healthcare? Is it finance? Is it tech? And so understanding that, and so again, like if all you need to do is learn about businesses and you've got your fundamental as an investor, basically pretty much everything's the same, right? Because, essentially what's the revenue drivers, what widgets are you selling? And that's it.
No, that's awesome. And it's a good foundation. And the more you learn, the more dots you can connect as well.
Correct.
Yeah.
Yes.
And you made a good point as well. It's not just how much you read, but it's also a people job as well. You got to manage and ask. So
correct. Yes.
Do you have a favorite side? Dealing with people, dealing with the numbers?
I like dealing with the numbers. So I think that's my preference. I think numbers don't lie, people do. So, and again, like it's just interesting, right? They say, hey, like this is a really good business, and I'm like, dude, your margins are like 2%. It's not great business. I mean, essentially, I know, or it's really good business and it's really high growth, and I'm like, dude, you've like grown like 5% in 2 years. It's not a great business. Or like, you're telling me everybody wants this product, and I'm like, nobody wants the product if you can't sell anything. And so I think, the numbers don't lie. I kind of like that. But obviously there's a softer skills part, right? Where, you negotiate a deal, you kind of understand the psyche behind someone raising capital, why they're building the business, are they passionate about it? People say, hey, we're going to be a unicorn. You want to build a unicorn? And I said, it doesn't really matter. And then they're like, why not? And I'm like, well, you could be a $500 million business and be extremely rich, versus a guy who owns $1 billion business and own like 2%, right? And so again, like, it's quite interesting from that standpoint, that people are so fixated with money, right? And so I think for us, when we invest, it's the motivation behind the founders. Are you true to what you say? Are you a good person at heart? Are you trying to save the world? And obviously these are brownie points that you kind of, and then the guys who say like, hey, I'm here to like make money because I'm going to disrupt and I'll take this market share and that market share. And then you realize, because your intentions aren't that pure, it's not that easy because you're not as passionate as, making money, right? And maybe your job should be making money, not like building a business. So again, it's quite interesting from that standpoint. So we've invested in a lot of guys that are very passionate in their subject matter. If it's, a food company, for example, like Signature Markets, that we've invested in, he's really passionate about healthy food, about gratitude and giving back to society. And I think that's pretty helpful. When we've invested in, Naluri, for example, it's a mental health, and he really cares about, like, especially during COVID-19, we need to make sure that, all peers are sane and, everybody, gets the help or they need, because it's hard, right? You're isolated, everybody's at home, you don't see these guys, it's a superficial, video conference, and maybe everybody's struggling behind doors. And so, I kind of like the fact that, they stay true to what their, vision and mission is. And so we like backing those guys.
Yeah. I love your value focus, but also same thing. How do you balance the stories and the narratives that often drive businesses? Is it something that just they're passionate about? How do you maybe weight or discount that?
Well, I said the numbers don't lie. So it's easy, right? If they tell me like, hey, we're doing all this, and again, like the investments are not into, for example, like healthier food. So for example, like if it's Signature Markets and they're selling like, chips, popcorn and chips, they're not staying true to what they're saying, right? So, I think it's pretty easy to tell when you look at the balance sheet or the profit and loss statements. If you're selling, like low carb energy bars, 0 fat, you're true to what you say. So that's probably how I would approach it.
Yeah, fair enough. And to move on to RHL, why start it? What's the origin story? Walk me through it.
So I've been friends with Hamza for 20 years. So we were childhood friends. A little bit more than that now, actually. And basically, he's had an interesting background, right? So his family was civil service. for 4 generations. And so he wanted to come back to Malaysia. I never had a huge pull back to Malaysia or Southeast Asia because I was pretty happy where I was. I was in the US and I was in Hong Kong, Australia prior to that. And I kind of liked the lifestyle of overseas. But he wanted to come back. And again, when we talked about it, it was an interesting opportunity to capitalize some of the growth. I didn't really know what I wanted to do, but I knew I was good at investing. So I said, hey, and I really like investing. And also at the same time, we saw a lot of, guys that were passionate about building businesses. So we said, hey, we could just pretty much come back and do the same. And that was basically it. So he came back 2016. I came in 2017 to start RHL. I mean, he went back to his family business for a little while and then decided that it's not for him. So I came back, to start the business with him. And ever since then, I've been here.
Yeah, that's cool. And how do you think maybe your experiences abroad help you in what you do today, maybe?
I think at the very least, Hong Kong and New York do quite well as an investor, right? It's the largest capital markets in the world. We go really deep down into margins, sustainability of margins, earnings, price to earnings, price to sales, ROI, IRRs. So I think, having that strong foundation of finance, of fundamentals of it, has been helpful in terms of investing. So you have to, again, like people say, hey, I'm going to put money here and putting money. I'm like, well, it's not really putting money to work, right? It's really investing. And investing is the same as selling. It's a skill. It's like podcasting. It's a skill, right? Not everybody can do this well. I think, if you've worked overseas for a really long time, there's a lot of good things overseas. So you bring, that technical skills back to this part of the world. You put it together with, enough of curiosity. It's a really good recipe to do well for VC. And again, like if you're ballsy in this part of the world and you're taking big risk in terms of investing in younger guys, which a lot of this part of the world don't, because actually most of the world don't, right? People tend to ignore the younger guys pretty quickly and say, hey, you don't have enough of like years on your CV and therefore you can't be better than the guy who's 50. The reality of it is, the 50-year-old doesn't have as much hunger as the 30-year-old. And so essentially, we've kind of said, hey, I think if you're pragmatic, and I think if I did this, 10 years later, it would have been a very different outcome because I probably didn't have the drive with the hunger to do such a thing anymore. But because I've had enough of technical skills and coming back over here, it was a nice coming back.
Yeah. And do you view that as almost as part of your edge, being able to take those risks or bets on younger people and younger companies?
Yeah. I think so. You spot them early, and you grow with them. And again, like you understand what everybody's, pros and cons are, what's everybody's strengths and weaknesses. And you kind of, we've always said that, we're not investing in you, we're partners. So we're true and true partners. We don't walk in front of you, behind you, we'll walk side by side and, hopefully grow along the journey. So whatever help you need, which is capital, whether it's technical skills, whether it's, introductions, whether it's, just being someone with an agriculture background, which, we've got someone who helps us with that. That's helpful. And I think people like that story. So, we've been pretty successful in building them businesses because ideally you want to be value added, not just, throwing money and hoping it works.
So what does a typical day look like for you? Are you reading numbers? Are you meeting with founders? What's it look like, or a typical week maybe?
So I think it's a hodgepodge of everything. So that's basically it, right? You meet founders, you look at numbers, you're speaking to people about different ideas. It's quite interesting, and as I say, like it's an interesting place to be in because you're constantly learning about things. There's always a new idea. Whether it works or not, I don't really know. But to be fair, it's nice in a sense that everybody's passionate about this new idea, and rightfully so. If I look at my schedule, I'm out and about most of the times. And then you're meeting a lot of people. Yeah.
And it's infectious, meeting passionate people as well, eh?
Yes.
So,
correct.
Is there anything you wish you learned earlier when starting RHL Ventures?
Yes. Capital raising is not easy. So I think, like founders who find it difficult to fundraise, we found it really difficult to fundraise when we first started. And then I think the validation came when, the first company was doing well, the second company was doing well, and the third company was doing well, right? So I think capital fundraising was much harder than I thought. Everyone takes it pretty lightly. I learned not to now. So capital is much harder than they think. So, you don't want to blow money on unnecessary things, or, you don't want to be throwing money on companies that might not make it, or it's just good at parties and selling when, there's no actual product. So I think, probably that. And again, I think another thing that I would like to know a little bit more was, Southeast Asia was a difficult place to navigate. And I think when I first came back, I thought, it's the same, right? I could like approach it from one lens. It's far from that. And so again, if you're able to embrace the diversity and kind of, leverage off what you've learned and leverage off, other people's talents, I think that's probably a good thing.
And we talked about a little bit at the start, but given the sectors you're invested in, can you tell me everything you've learned just about customer acquisition? Like you mentioned mobile before.
And so it's interesting, right? We've got a business called RHL Ventures. When I met him, again, I tell this everybody the story. He was 24-year-old. He came in shorts and t-shirt. He was selling shorts, so I guess, legitimately he should have worn his shorts, and I think that was what he was trying to tell me. So he came in shorts, and again, it was quite interesting. He was selling a bunch of shorts, which again, were more impressive than I ever thought. And then he ended up selling 8-digit millions, more than $30 million US of shorts, and it was a span of being a year for a business. So from that standpoint, I think these are the guys that you want to kind of back a little bit more. You want to be a bit more pragmatic in terms of the way you invest. And again, so we invested in him, and growth has been stellar. But it's been interesting to see where everybody's been in the last couple of years.
And if it's all right, I'll move into my closing round of questions. Is that all
Sure.
right? So I've just got a few for you. What do you think is the most undervalued life experience that university-age students don't give way to? So like you've been abroad a bit, but what do you think is an underrated skill or an experience that you think most people should have?
I think traveling has been helpful. So I spent a lot of my 20s traveling. And again, different places, right? You go to Europe, you go to the US, you go to Africa, you learn a lot from different culture and different experiences. But so essentially it's exposure. The more you know, the more open-minded you become, and you're willing to try new things, and then you grow. You learn and you grow, right? And I think if you're able to learn and grow, that's a very powerful skill. The guys who stand still and the guys who say, I cannot change, are the guys who will fade away, they'll be extinct, and someone will take them over. And I feel really sorry for people who say, I can't change, this is who I am. That's pretty sad, because, do you really want to be the same person at 80 and 25, right? So I think that's probably it. Travel, be exposed, be open-minded, see different things, try different things. University doesn't allow you to do that. University, wants you to be, conform to everything. Uniformity it's quite funny because, I tell my mom, right, when I was younger, I say, hey, you told me to try everything. And then when we went to university, you're telling me or school, you're trying to get me to sit down and just, learn from the book and just follow everything what the teacher says, right? And, go be a doctor, be an accountant, be a lawyer. And then so what's the individualism in that? What's the uniqueness in that, right? How do you strive for excellence? You're conforming to social norms. So, ideally we want to be able to embrace, everyone's diversity and being true to yourself. And so, I don't know, I feel really sad when people say I can't change. And again, the universities that don't your first class honors, you get your 85, you get, I mean, half the world's founders haven't gotten university degrees, or half the world founding billionaires don't have university degrees. So it's kind of nice. Yeah.
No, I honestly couldn't agree more. And I love the idea that if you behave the same as everyone else, you'll achieve the same as everyone else. So
exactly right. Again, how do you stand out? How do you be different if you're going to conform?
Exactly. And you obviously read a lot. Is there any books that have been influential in shaping your worldview?
So when I hit 13, I had this immense fascination about China. So my grandparents were from China. But I've never been to China at that point of time. So actually, I've never been to China until I was 22, actually. And so I think there was an immense curiosity about China and, the Chinese value, the Confucianism. So there's a book called The Chinese Cinderella by Adeline Yanma. And I think the fact that she depicted China in 3 very different eras. One was the Manchurian era, which was, the emperor was there. 2 was when, between communism and what it is currently, right? So I think, it depicted China in 3 different governance or community or society in a relatively short 60 years. I thought that was quite interesting, right? And so kind of learning and seeing how societies change was interesting for me. So, we always say like, hey, Malaysia is a lost hope. There's no hope for Malaysia. It is what it is. We decay along the way. And you look like a country like China, it's gone through, one king for, I don't know how many destinies there was, and then going to then a more socialism, communism setting, and then coming into a communism setting. But now really, it's capitalism, at its very best, right? And so again, having seen that huge spectrum, was genuinely interesting for me. So for me, I don't really like politics because I think politics is full of sham, but I'm curious on the human evolution and ideologies and how it works. So again, this particular book was interesting for me because it was basically that. I've never seen a country change so quickly in 60 years. And evolve so quickly in terms of idealism and socialism, right? So again, it was quite interesting. So yeah, so that's probably, like the one book that probably had a lasting, impression on me.
No, great answer. I love a new book recommendation. So
yes.
My final question is like, what plans do you have for the next 5 to 10 years? Like what areas are you most curious about going forward? And yeah.
So I think for RHL, we're building a financial institution, right? People say we're a VC, but essentially we do VC, we do private equity, we do advisory. So I think the way we're looking at it is building, a large scale financial institution that's nimble in terms of the execution. And again, like, a bit more innovative in the ways that, we look at businesses, investing and partnering businesses, right? So for us, we want to find good businesses to partner with. Ideally, we grow along with all these guys and hopefully we change the world. And I think if we can do that, I'll be pretty happy.
Yeah. No, awesome. Rachel, cheers a million for being on. Anything else you want to plug?
No, thank you for having me.
No, it's my pleasure. Thank you. If you enjoyed this podcast episode, be sure to check out the website compoundingpodcast.com. On the website, you'll find every episode complete with transcripts, show notes, and other related resources. If you want an email notification every time an episode releases, plus my lessons and takeaways from each episode, be sure to sign up to the Substack. So that's compoundingcuriosity.substack.com. Either way, links to all content mentioned today will be in the description below, and you can also connect with me on Twitter @ScarrettKalani. But until next time, have a good one.